The federal government's first budget under Prime Minister Mark Carney includes a number of new tax measures for individuals and businesses, some like the GST rebate for first-time homebuyers and the formal cancellation of the capital gains tax hike were previously telegraphed. But there were fewer of the pocketbook promises many Canadians have come to expect. Joining us to give us his take is Sébastien Desmarais, Vice President, Tax and Estate Planner at TD Wealth, to discuss what it all means. It's nice to have you here.
Pleasure to be here.
Now, you and I were chatting earlier, and this seems to be some work that's really built for incenting investment, incenting building.
Yes, indeed. So they've got measures for individuals, they've got measures for the businesses. When it comes to business, they're really trying to promote investment and productivity. And for the individual tax measures, interestingly, a lot of them were already pre-announced. There's a few new measures, but a few old measures that they've put in the budget.
Yeah, they just confirmed basically what they already said. Let's run through them, and you can tell us just whether. So the first one was, lowering marginal personal income tax rate from 15 to 14, and again, this is a confirmation.
That's right. So they're confirming that the tax rate, the first tax bracket, is being reduced from 15% to 14%. Another measure that they're confirming is first-time home buyers. Mm-hmm. So the GST is now confirmed, eliminated for first new home value under $1 million, and the GST is reduced for a house that are between $1 million and $1.5 million. The capital gain inclusion rate.
Very unpopular.
Very unpopular. Well, it's now canceled.
Yeah.
So that's good news.
And that, just to be clear, so that will stay at 50% for all gains versus
50% inclusion rate. That's
right.
Correct.
Okay. Keep on going. There is the underused housing tax eliminated. This is new, though, is it not?
This is new. So this was implemented a few years back. So underused housing tax is now also eliminated. I think that's a good idea. Mm-hmm. It brought more confusion than anything else.
Yeah.
The automatic tax filings for low-income Canadians.
Yeah.
A lot of them were losing government benefits because they were not filing tax returns, right? They didn't see the point. So now the government's bring this new initiative where the CRA will file the return so that the individual can get some government benefits that they might have missed out.
Yeah, and that was telegraphed, and this is great, again, from a safety net standpoint.
Absolutely.
Yeah. Personal support workers, again, this one was telegraphed.
This one was telegraphed, but this is a targeted measures, right? This is the people that are vital for long-term care homes, hospital, and community support services, right? So the measure is it's a 5-year measure for refundable tax credit equal to 5% of their eligible income, up to a maximum of $1,100 per year. So I think that's a good measure.
Yeah, again, good for the safety net standpoint too, for
Absolutely.
seniors. You also noted, I think, there was a Canadian entrepreneur incentive, and this is something that was new. It was being canceled. It's
canceled. So this was a measure when they talked about the capital gain inclusion rate increase. It brought in a new measure, which was the Canadian Entrepreneur Incentive.
Yeah.
And now in this budget, when they cancel the inclusion rate increase, they also cancel this initiative, the Canadian Incentive.
And I don't want to go too deep into everything, but I know there were some changes to the kinds of investments that can qualify to go into some registered accounts. And so they've made some changes. These are mostly for non-public investments inside these accounts.
Correct. So they're essentially changing, amending the rules and harmonizing the rules when it comes between the different registered accounts in terms of what qualifies as a qualified investment business.
Yeah.
And I think this measure will be implemented in 2027, so there's still time. So clients or individual will want to review their registered account to see if this measure will have implications for their registered accounts.
Another couple things, I know that you've got notes because you were showing me earlier that some targeting for both youth and seniors.
Yes, a good one for youth. We know that this summer a lot of youth had a hard time finding summer jobs.
Yeah.
So there's a proposed fund of close to $600 million to help over 100,000 summer jobs for youth and young adults. So I think that's a targeted measure that will be helpful.
Yeah.
Also, they talked about the new Horizons for Senior program, helping seniors to get involved in the community. So that's a new program to help seniors get involved and be more active within their community.
Which is great.
Yes.
Okay, now we're going to shift gears and talk about, again, the focus on investment, on building. And so these are some new, I'll say programs or tax programs, which are going to incent that. And this is, again, for business, and so for business owners as well, as they pay attention to what they can take advantage of as they try and build.
Yes, so for business owners and the business community wanted to see action, right? And the government wants them to invest. So there's two measures, I think, that are really striking in this budget. One is the productivity super deduction, essentially depreciation. So they will allow companies who invest in equipment, machinery, technology to write off the capital costs much more aggressively. This is a smart measure in my book. Also, it allows them to be more competitive with the United States, right? That this is a measure in the One Big Beautiful Bill that was promoted in the US, and this allows our companies to be more competitive, or at least as competitive as possible in this. So they will be able to write off significantly and more aggressively the cost of their investment to greater productivity in the long run.
And that's a big one. I think
That's
a lot
a
of
big
people will be very pleased to hear that. Now, SHRED.
Yes.
Tell me what SHRED is, and because it's, again, the same idea, trying to incent research and incent, again, the investment side.
That's right. So when you do investment in research and development and so forth, the companies are entitled to receive some tax credit, right? And what they do is they've increased the expenditure limit of the research from 3 million to 4.5 million. So that's a nice add-on. They will also allow public corporation to now claim some of these depreciation, some of these SHRED. That's significant.
Yeah.
And interestingly, they also say that the Canada Revenue Agency will implement and transform the administration of the SHRED program. And again, this is something to make sure that a company that will invest in research and development will be able to get their credit more efficiently.
Yeah, that's half the battle, right?
That's half the battle.
Talk to me a little bit about, and I know there's a lot more detail I'm sure we can get into, but just for this conversation, you made a comment to me that for business owners, with this budget, this might be a good time to check in on the corporate structure.
Yeah, so every time there's a budget, I think business owners of private company always should review these new rules to making sure that their corporate structure maximizes the efficiency, right? There's a few rules that are worth mentioning. They've got the tier corporation, and they're looking into it more, right? That is a company owning another company, and they sometimes owning another company, right? If that's the structure that you have in place, you may want to talk to your tax advisor, because there might be new rules coming in. If you have a personal trust, a family trust, right? Many business owners have family trust. Family trust has essentially a lifetime of 21 years for tax purposes. It's a triggering event on the 21st anniversary. Finance is looking on the 21st year planning, and they're going to narrow a little bit what can be done on planning. So again, business owners needs to review these new rules, making sure that everything is efficient on their side.